I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Podcast Show, and today is October 5th.
And this is your interest rate update.
If you're new to the channel, be sure to subscribe, comment, and like. Before we get into everything, remember, this is for informational purposes.
Informational purposes, that's right.
Informational purposes only. And before we get into the actual interest rates, we're going to show Maricopa County statistics here for the homes that are for sale. And we're going to just dive in a little bit here because I think this is good insight that we dug up here. There are about 20,000 homes for sale.
And that's if you go on the MLS right now.
Well, yeah. From
type in MLS, or not type in, but if you have access to MLS, it's about 20,500 homes for sale.
Yeah, it's from other sources as well. I mean, they've about 20,000 homes for sale. Now, I've just, based on my research, 27% of those homes that are on the market are second homes. 18% of the homes that are on the market are rentals, and 55% of the homes on the market are primary residences. Now, this is what's interesting. I was telling Tom this, that, there's about 70% of the homes in general in Maricopa County are primary residences. So about 15%.
Fewer homes. Yeah, on the market.
Yeah. So this next slide, we're going to show you of those homes that are for sale, of those second homes, look, 75% of the second homes for sale are free and clear.
And why do we care about homes that are free and clear? What's the difference between free and clear homes and homes with mortgages?
Because this is going to give us some insight, because these are the people who are selling.
These are your sellers.
These are your sellers. So this is showing us who are our sellers in our market in Phoenix, the greater Phoenix area.
Yeah. Do you have a huge loan that you're having to pay off, or even just a small loan? Well, actually, yeah, just call it a big loan. That's much different than someone who's sitting back, has mortgage-free situation, and you offer a price that's low, and they're like, no, we'll go ahead and wait. Thank you.
So 45% of rentals are free and clear. So there's a lot of free and clear homes that are for sale right now. And only 20% of primary residences are free and clear.
And I'm actually a little bit surprised by the 20% of the primary homes being free and clear.
Thought it'd be a lot more.
I don't know. I don't know.
Or a lot less.
Be a little bit less.
Okay.
I mean, 20%. That's pretty good. 1 out of 5 have a paid off mortgage. That's phenomenal.
So historically, these numbers, what we do know is this is not normal. I don't have a historical chart on that. I'm trying to see if I can get historical charts, but the point we're trying to really kind of, from this information, I think what we can basically say is the sellers are people who do not have mortgages. They are motivated differently to sell today than versus a year ago or 2 years ago or 5 years ago. And basically, these sellers, and this is part of our thesis, is that they are not willing to trade in, or the homeowners who have mortgages right now, they have low interest rates. They're not willing to trade in their low interest rate that they have received over the last couple of years for a higher rate today.
Yeah, which is why we're saying it makes sense that there are fewer primary homes for sale than there are actually occupied. If rates were lower, people would be more apt to trade in, trade up, trade down, do whatever. But right now, they're like, why am I giving up my great interest rate just to go find a different home, slightly different, and pay more?
Yeah, I mean, second home if you're owning a second home in Phoenix and you live in Minnesota, well, if things have tightened up, and of course in the economy, you can just sell your home. There's no mortgage there's no financing on it that, with that 2.5% interest rates or 3% interest rates, you can just sell. But there's only so many homeowners who have second homes and rentals. And so this is our second point of our thesis, is if we don't see a lot of homeowners that are primary residence owners put their homes on the market, we're probably going to see prices continue to kind of be bolstered, right? And we're not going to see massive inventory hitting the market.
Right. Yeah.
I could be wrong, but...
And if the pricing is not bolstered, it's going to be at least holding firm or more firm. Supply and demand. The more supply, then and then demand doesn't change, pricing's got to come down. Less supply, same demand, you're going to be paying a little bit more, or again, those prices will be stabilized.
Yeah.
So I think that's phenomenal. We've been talking about all the different impacts and variables within our market. These high interest rates not only just affect, pricing on mortgages, but they affect the psyche of what people do. Do we sell? Do we own? Do we buy? And yeah, I think that second point is worth money.
Okay, so let's get right into the interest rates today. We see them, again, our update was last week, but today we see interest rates coming down to 6.25% on the 30-year fix. 15-year fix, we see a 5.5.
The 30-year FHA, 6.125, and the 30-year VA, 6.125.
And these quotes have no extra fees, no extra buy-down costs based off of these loan scenarios for conventional, FHA, and VA.
Yeah, remember, every loan has costs. At least they should. If they don't, it's being buried in the rate. So if you need to have lower interest rate for whatever purpose, we can introduce points, but typically all the loans we offer our clients are what we call at par, which is a no-point typical closing cost loan.
So we'll be back with another update. Be sure to subscribe, comment, and update. Take care, everybody.
All right. Thank you, folks.
Thank you for watching the Mortgage Brothers podcast. If you have any questions, email us at team@azmortgagebrothers.com. And if you like this content, be sure to like, comment, and subscribe to the Mortgage Brothers team.